Hi, good afternoon. This is Susie. There were several questions about the difference between absorption costing and variable costing methods. So I decided I would go through an exercise for you, and hopefully this helps clarify. So this exercise, I'm going to show an example using the sale of and production of 2,000 shirts. We're going to sell them at $35 a piece. But they are going to have a cost using $4 for direct material, $8 for direct labor, $2 for variable cost, and $3 for fixed cost, or total fixed overhead would be $6,000. So with the absorption costing method, they have a total cost of $17. With the variable costing method, it's only $14 because we have a total fixed overhead of $6,000, which we do not include in the per unit production cost. So with variable costing method, we're only going to add $28,000 to inventory because it's 2,000 shirts at $14 a shirt. And we're going to add $6,000 of fixed overhead to our expenses for the month. Now, under the absorption costing method, we are going to add $34,000 to our inventory because we have 2,000 shirts at a cost of $17 per shirt. Now, as I said, these are going to sell for $35 a shirt. The first month, we are going to sell 600 shirts. Under the absorption method, those 600 shirts are going, well, under both methods, the 600 shirts are going to sell $35, which would be a total sales of $21,000. But under the absorption costing method, the cost of goods sold would be $10,200, which is the 600 shirts at $17 a piece. So our gross margin for the month would be $10,800. Now, with the absorption costing method and this example, all our expenses would be the fixed admin expenses of $1,100. So our total operating income would be the $9,700 then. Now, under variable costing method, we had the 600 shirts, which is sales of $2,100. That's cost of goods sold was only $8,400 because the 600 shirts had a cost of $14 a piece. So this leaves us with a gross margin of $12,600. Thus, in this case, the total fixed overhead that we incurred that month of $6,000 and our fixed admin expenses of $1,100. So we have a operating income of only $5,500 using the variable costing method as compared to the absorption costing method of $9,700. So you can see there's quite a bit of difference. And there is the discussion of why GAAP would use absorption costing method because variable costing method is recognizing the true costs that were incurred. Well, let's go and look at the second month. In the second month, we sold 500 shirts. And so the 500 shirts, we had $17,500 in sales. Cost of goods sold is $8,500. So then our gross margin is $9,000. Again, we had fixed admin expenses of $1,100, and this time we only had $7,900 in income. Now with variable costing, again, the sales are the same, 500, which nets to $17,500 in sales dollars, and our cost of goods sold is only $7,000, which goes to a gross margin of $10,500. And this month we had no fixed overhead because we recognized it all the month before. and we had no additional expenses. And then our fixed admin expenses of $1,100. So this month we had operating income of $9,400. Now we had less shirts sold, but we had higher operating income. And that's because we recognized all the overhead in the 1 month. So you can see in using variable costing, your income is not going to be as reliable as it would be with absorption costing. Now, when one could say, well, that's no reason to use absorption costing because just to make it, more predictable. But the reason you would use absorption costing is because you're recognizing the expense when the revenue occurs. The expense of this fixed overhead went into the cost of these shirts. This fixed overhead is in with each one of these shirts. And so when we sold these 600 shirts, we recognized this expense when we sold them. Then when we sold these 500 shirts, we recognized the portion of that expense in this month. And one thing with GAAP, and it deals with the accrual method of accounting, which GAAP is a proponent of, is recognizing the expenses when your revenue in the same period as your revenue. So if you have a sale, you want to recognize the expenses that same period your revenue is recognized. So you do not want to GAAP and the accrual method of accounting. You have this overhead for all 2,000 shirts in the 1 month. The accrual method of accounting and GAAP doesn't want to really recognize all of that expense in the 1 month. It wants to spread it out so it recognizes and matches. It's kind of the matching principle. It wants to match that expense with each shirt when it's sold. Hopefully this example helps better explain or better illustrate the difference between the two methods of accounting or costing, and provides a better understanding of why GAAP uses and prefers the absorption costing over variable costing.